Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. Thanks for tuning in today. We are live on this Rapid Fire Friday, and our phone lines are soon to be open very quickly. If you've got a question for us today, you can get your call queued up at 610-363-1110, and you'll be the first caller in the queue. So we're going to get you caught up. We're going to get you in the know about recent economic and market conditions. And of course, we're going to get encouragement from the scriptures. Today we'll be in Psalm 127, 3 through 5, and we'll be taking your calls and answering the questions that you've sent in. So at Financial Issues, we help you to stay in the know about the financial issues of the day. We help keep you abreast of what's happening in the economy and the markets and help you understand how that impacts your own personal financial issues. Got several takeaways from this week that is ending May 9th, 2025. First, the Federal Reserve held interest rates steady for the third straight meeting. It was very widely expected. There were no surprises there. The current rate for short-term overnight borrowing between institutions that the Fed sets remained between 4.25% and 4.5%. Fed Chair Jerome Powell said that inflation is still too high for his comfort, but acknowledged that the labor market is softening. So the Fed doesn't want to tip the economy into recession. So, their dual mandate is price stability, keeping inflation from running out of control, and to keep unemployment low. So if they have to walk a thin line between balancing those two mandates and are kind of stuck in stasis right now. So he also noted the growing risk from tariff policy, especially that higher costs continue to ripple through supply chains. Markets were okay on this announcement because no change is exactly what they expected and had priced in. And the markets still see the first cut of at least 25 basis points from the Fed happening now in the July meeting. It was the June meeting. Expectations have dipped to 60% from 92% a week ago. So there is still, though, about a 100% chance of at least 3 rate cuts by year end. Next up, President Trump announced a new trade agreement with the UK yesterday. The deal cuts U.S. tariffs on UK-made steel, aluminum, and autos, and the UK will lower tariffs on the U.S., beef, ethanol, and some consumer goods. But a 10% baseline on most of the UK imports will remain in place. It's a symbolic agreement, and it's more about renewing ties with our allies. I'd much rather do business with those who we consider to be friends than those who we consider to be foes. And it's about less about immediate economic growth. These kinds of economic policies take a little bit of time to work itself through the economy, but it's a great start. Still, it moves the U.S. further away from dependency on adversarial nations, which is a good thing. Speaking of which, this week, Russia and China deepened their alliance, at least symbolically. Vladimir Putin and Xi Jinping signed a joint statement committing to expand trade in their own currencies and resist U.S. hegemony. They also pledged to cooperate more deeply on energy, security, and digital systems. This formal alignment between Russia and China is part of a growing economic divide between the U.S. and nations like China and Russia, and it could reshape global trade routes and investment flows in the months to come. But at the end of the day, China still needs us, and talks are set to start this weekend in Switzerland. I see the agreement signed by China and Russia as mostly showboating as a way for Xi Jinping to retain credibility with his people. But who really needs credibility when you have intimidation working for you? We also got an update on consumer inflation expectations this week. According to the University of Michigan, consumers now expect inflation hearts are inherently wicked. And that we can't really rely on our hearts or our feelings. And history tells us that in this specific case with inflation expectations, they're sort of unreliable. It's not really a good, reliable indicator what consumers think inflation is going to be, because it seems that whatever current inflation is tends to taint future expectations. What do I mean by that? Well, for example, in June of 2022, consumers expected inflation to average 6.8% over the next 12 months. At the time, inflation was running over 9%. So consumers were still a little bit pessimistic and expected that inflation over the next 12 months would still be high at close to 7%. What was the actual inflation read a year later, June of 2023? It was only 3%. So it's a clear reminder that public sentiment doesn't always track with economic reality, and why we must remain focused on fundamentals, not fear. Lastly, the U.S. labor market showed uneasy signs of resilience. The weekly jobless claims numbers that we take a look at every week fell by 13,000 to 228,000 for the week ending May 3rd. It was a reversal from last week's spike, which was, as we indicated, most likely caused by a drive in temporary unemployment claims by spring break related layoffs in New York. The 4-week moving average, which tends to smooth out the volatility from the week-to-week numbers, now sits at 227,000, up from 212,000 in mid-January. And what is the trend? Well, the trend since January, the 4-week moving average has increased by 7% since January. So unemployment is still historically low, but something that we are keeping a close eye on. Continuing claims also declined, down 29,000 to 1.879 million, suggesting that those who lose their jobs are still able to find work fairly quickly. On the corporate earnings front, as of May 2nd, which is a week behind, we get the updated numbers later today, but we'll go with the most recent that we have. So as of May 2nd, approximately 72% of S&P 500 companies have reported their first quarter results, and publicly traded companies must report their results once a quarter. So we are in the midst of earnings season. We're at the tail end of it now, but so far the reported earnings have been good, with a 12.8% year-over-year increase. Those are the kind of fundamentals that we're talking about. This marks the second consecutive quarter of double-digit earnings growth for the index. Despite these strong results, though, there's a notable trend of companies that are exercising caution and in some cases withholding future guidance because of the impact that they are either experiencing now or anticipating experiencing from the ongoing trade tensions and tariff policies. This hesitancy reflects broader concerns about potential economic impact from those unresolved trade policies, although things are looking up on getting a resolution. Looking ahead, analysts project earnings growth rate for the second quarter of 2025, the one that we're currently in now, at only 5.7%. That's a slowdown from the 12.8% in the first quarter. 7.8% for the third quarter and 7.1% for the fourth quarter, culminating in a 9.5% growth rate for the full year ahead. That's still pretty decent. Bank of America also released their consumer spending report that showed that the consumer is still resilient and still holding up. Spending was up 1% according to their study in April, while inflation is also moderating. So that tells me inflation is not driving higher spending. More people than usual, according to this Bank of America study, indicated that they would be saving or investing their tax returns, which, by the way, were up 2% over last year's tax return. But preliminary data has shown that many consumers did spend, since spending on items like clothing and durable goods ticked up during this time. The GDP Atlanta report showed that 2.3% was the expectation for growth in the economy for the second quarter. The markets are somewhere around the flat line for the week. One of the indices are negative, the other two slightly positive. We'll see what happens. Here's what we're watching for next week. April's CPI numbers drop. Those are the inflation numbers. Several Fed officials are going to be speaking, and will continue to monitor the spending and investment results. Now that you're in the know about recent and upcoming financial issues, we hope that you'll learn more about how we can help you integrate those issues into your own stewardship. Find out more about us at financialissues.org. Stay tuned. We've got a break, then we'll be right back.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
Each May, we celebrate Mother's Day and the gift that mothers are to us. This May, you can help make motherhood possible by supporting Preborn. Preborn partners with clinics across the country, providing free ultrasounds and sharing the hope of Jesus Christ with women who are abortion-minded. When you give to Preborn, you're giving these women a chance to choose life. Go to preborn.com/FISM to give today. That's preborn.com/FISM.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. It's Rapid Fire Friday today, and our phone lines are open. The number, if you want to be the first person in the call queue, 610-363-1110. That's the number that you call. You'll be first. Let's get this segment started with the stewardship verse of the day. Comes from Psalm 127, 3-5. Behold, children are a heritage from the Lord, the fruit of the womb a reward. Like arrows in the hand of a warrior are the children of one's youth. Blessed is the man who fills his quiver with them. And Seth, you're well on your way to filling that quiver.
That's right, Shana, absolutely. I always tell people now I'm playing zone defense. So before Megan and I could play man-to-man, and now it's over. So just have more and more kids, and it's not going to be any different. But, Shana, it is true, the core of the pro-life movement, which really is biblical, is this promise that children are a blessing. Pro-abortionists upend the word of God. They view children as a curse. They view children as a problem. At best, they view children as a nuisance. But really, I think at their worst, they actually do hate children. We don't. We love children. We think children are a blessing from God because the scripture says so right here. Blessed is the man who fills his quiver with them. Shana, with that too, that doesn't necessarily mean that you need to have 20 children. It means that you be a good steward of that gift. Yeah. But it is a principle that children are a blessing, and that's absolutely true. So I hope that we'd see the little ones the same way that God does, as a blessing to be loved, cherished, and protected.
Amen.
Yeah.
You know, children are not only a blessing, but the scripture tells us that they are a powerful weapon.
Yeah.
And, as you alluded to, an amazing stewardship opportunity. Arguably, a more important opportunity than the opportunities that we get regarding our money. You see, arrows don't shape themselves. They are carefully crafted, straightened, balanced, and sharpened for purpose, just like children. Our kids aren't born ready for battle. They need to be shaped by truth, balanced by love, and sharpened by discipline and example. Arrows aren't meant to stay in the quiver. They are launched. They are sent out. So we raise our children to send them into the world, into God's mission, into their calling to be salt and light. So our role is not just to protect them, it's to prepare them. We aim them towards God's purpose, and we trust Him with their flight. That's the hard part.
Yeah.
Now, here's the hard truth and why this matters so much in our culture today. Satan hates arrows. He doesn't want children shaped. He doesn't want them launched. He wants them destroyed before they're even born. So abortion is not just a social issue, it's a spiritual attack from the pit of hell. It's Satan's attempt to eliminate a generation of image bearers, errors that can be used to tear down strongholds of the enemy and to build God's kingdom. That's why we can never be silent on the issue of abortion. Children are not accidents. They are not burdens. They are blessings, gifts, weapons in the hand of a warrior. And when we support life, we wage war against darkness. So let's be bold. Let's be faithful. Let's shape our arrows and send them out. And let's do everything that we can to defend life, because every child has a purpose and the enemy knows it. Let's not only defund this darkness by screening out companies from our portfolios that support the murderous agenda of abortion. Let's fight against it with our financial resources. At Financial Issues, we are proud to stand with Preborn, a ministry on the front lines of this spiritual battle. Preborn is rescuing babies and saving souls by providing free ultrasounds to abortion-minded women. Because when a woman hears her baby's heartbeat and sees life on the ultrasound screen, 80% of the time she chooses life. So we are helping Preborn in their Mother's Day campaign this year. Seth, you want to give the details and the update?
Yeah, I'd be glad to, Shana. So folks, we're trying to raise $280,000. That's the equivalent of 50 ultrasound machines. We have a generous donor who is underwriting these machines. Every time we hit $5,600, another ultrasound machine will be underwritten and placed into a Preborn clinic across the country. And by the way, Shana, it's important to kind of think about this also. Preborn is very strategic about where they go. They're trying to go to places that are heavily concentrated abortion areas. We're talking major cities, places where Planned Parenthood has a pretty strong grip. They're trying to go directly into that battlefield there. So that's part of why this is just so important here. We're just above $20,000 as of right now. So we've got about 3.5 ultrasound machines underwritten, which is great. Once again, Shana, every gift counts. $28 provides that potentially life-saving ultrasound scan. But I would bet there are probably listeners out there who could underwrite one whole ultrasound machine right now. So if that's you, or if you're just one who can give $28 or even less than that, you can go to our website, financialissues.org, click that Preborn banner. That takes you to preborn.com/FISM, where you can give in a safe way. And Shana, I can't forget this also, that this is a double gift. So if you give to Preborn, it comes back to FISM. The entire amount will be given back to FISM by this generous donor. So if you love FISM, give to Preborn. If you love Preborn, give to Preborn. This is about giving to Preborn here.
Yeah, absolutely. It's great, and because it's not just the Planned Parenthoods, we all celebrated the overturning of Roe v. Wade, and I still celebrate that today, but, the enemy just changed his tactics and morphed them a little bit, and, the most common way, I think, now that women are having abortions is through chemical abortions.
It is.
And they're doing it alone. They're doing it in their homes, most of the time in their bathroom. They're delivering what they are sometimes shocked to find out is a real baby, a real live baby. And so, the damage is not only done to the babies by taking their lives, but the mother's life is forever changed after that, after they experience that kind of traumatic event. So we would just encourage you, not everybody can go stand in line, to protest at an abortion clinic, or stand outside and pray, or sing hymns, or whatever it might be. But, so many of us have a few extra dollars that we can allocate towards this life-saving mission. So I encourage you to do that, because Mother's Day is this weekend. So, if perhaps you want to donate on behalf of your mother and share that news with her, and, take the opportunity to thank her for choosing life for you.
And folks, I have to say this as well. You could maybe do it. I'm throwing this out there. You could give a Mother's Day gift to Shana, who is a mother, and as a happy Mother's Day to her. And her birthday is this month as well. So all the more reason to give. I am trying to guilt you to give. Yes. Please give to Preborn in honor of Shanna. So yes, go ahead and do that. Right now would be great.
Yeah, just talk to the Lord about it. The Lord wants us to be joyful,
Amen.
Generous, and obedient givers.
Yep.
And, that's what I think that's the place that most Christians will end up whenever they consider how good the Lord is, what all He has done for them, and our natural response is one of gratitude.
Amen.
All right, let's see if we can answer some questions.
Cool.
I saw some calls coming in, but doesn't look like they're there anymore.
Yeah, sounds good. Folks, call in. Phone lines are open. Shanna, we had two questions here. One from Aaron, one from Jen. They're both concerning housing in Southern California. So I'll read Aaron's question, and I think Jen's is pretty similar as well. They live in Southern California. They recently started looking at houses. They found a house when they started looking and recently made an offer on it. The owner accepted. Aaron says, we should be ecstatic, but I'm terrified the market's going to crash. My wife is on maternity leave, likely isn't going back to work. If we stay renting, that won't be an issue. However, if we buy, she will need to work. I own a business, and Q1 wasn't as strong as it normally is, and I'm not really sure what to do. And then Jen asking kind of a similar question here about, some of the things in the kind of OC area in, Southern California. Just wondering what to kind of do there. So what insight would you have for these folks?
So, a lot of great questions there. So I'm not certainly a real estate expert, but I do follow kind of the trends nationally. So I'm not an expert in the local Southern California market. But I will say this, renting, you mentioned renting. You wouldn't have that issue of the house decreasing in value if you're renting. But the trends in rents is actually upward. So, we've had, I don't know how it is in your area, but there has been a little bit of a lack of investment in, multifamily properties and things like that. So when you have less supply, then you have demand for rental properties, then the prices go up, and we've seen rent prices go up. So, that could be a potential threat to, your current situation if you're coming up on renewing your lease and your rent is constantly going up. So what I would say to that, if this is a home that you plan to stay in for the next 10 plus years, I wouldn't be that concerned. We need a roof over our heads. We need somewhere to live. We need shelter. And there's that decision between owning and renting. But if you plan to stay in the home for the next 10 years, if you're looking at it as a home rather than an investment, now you should never, completely just ignore the financial aspects around it. But if you plan to stay there for the next 10 plus years, I wouldn't really be that concerned about housing values temporarily declining. The market value of your home is only important for a couple of reasons. The main reason is if you sell. So if you buy the home at a price now and the price goes down and you have to sell, well, you could lose all of the equity that you had in it. You could even be in a worse situation. Or the other scenario is that you need to borrow against it. So if the value of your home goes down, then the amount that you can borrow against it might go down as well, or will go down as well. So mortgage rates are likely to move down in the next few years as we see the Fed start to ease, because the 30-year rate tends to follow, not exactly, but tends to follow in the same direction as the direction that the Fed is moving rates. So if you buy now, you may have an opportunity to refinance that home in the next few years if mortgage rates are lower than what they are now. That will help with the affordability piece of it. So if it's a home and the home value decreases, the risk is if it decreases too much, you might not have enough equity to refinance. So you're going to want to pay attention. You're going to want to be diligent about the amount that you put down on the home. So I know that Southern California is beautiful, but the other consideration that you could have is to consider moving somewhere else. I don't know how that would work with your job, but you can get way more for bang for your buck in other parts of the country than you can in Southern California. And if that's the case, then your wife may be able to stay home and focus her time on raising your kids in the fear and admonition of the Lord, which is something that we just talked about with our stewardship verse of the day. Being a good steward over those children and being able to shoot them out into the world to fulfill their God-given purpose. Stick around, folks. We've got more to come. If you have to leave us, we wish you a farewell.
Each May, we celebrate Mother's Day and the gift that mothers are to us. But for many women carrying a child, motherhood feels uncertain. They're facing fear, doubt, and some are considering abortion. This May, you can help make motherhood possible by supporting Preborn. Preborn partners with clinics across the country, providing free ultrasounds and sharing the hope of Jesus Christ with women who are abortion-minded. When you give to Preborn, you're giving these women a chance to choose life. Just $28 helps a woman hear her baby's heartbeat, a powerful moment that leads 80% of mothers to choose life. And when we come together to sponsor 200 ultrasounds, we'll equip a Preborn clinic with a life-saving ultrasound machine. Will you help make motherhood possible? Go to preborn.com/FISM to give today. That's preborn.com/FISM.
Every day, kids all across America are coming to school with some kind of hidden pain.
I've seen kids come in who are just so confused about what's right and what's wrong, just having no idea that God loves them. And this just breaks my heart. Crossroads has the opportunity to bring the Word of God right into the public school, to reach children right where they are.
And when we see that happen, we see God changing lives.
We want to see kids not only come to Christ, but pursue a lifelong relationship with Him. And so local churches are uniquely positioned to disciple those children as they become young adults and through their lifespan.
Crossroads comes alongside a church and provides that church with a club structure, curriculum, training, and ongoing coaching for them to run these outreaches in public schools.
If you are burdened for the children of America, consider making a donation to Crossroads Kids Club. For more information, visit reachOurschools.com. That's reachOurschools.com.
Welcome back to Financial Issues. Thanks for sticking with us today. It is Rapid Fire Friday. Our phone lines are open. 610-363-1110 is the number to call. You will be the next person in the call queue right after we get to Scott. Scott's calling from Georgia. Hi, Scott. You're live on Financial Issues.
Okay. Hey, Shana. Hey, Seth.
Hey, Scott.
Thanks for receiving the call. Hopefully y'all are well. Hey, Shana, so my question is, just one of just trying to understand better the new website. I'm a partner for a couple of years now, and I'm still in the process of repaginating my portfolio to be in alignment with the allocation strategies. And I'm in a growth and income strategy. The preferreds is one of those big, tall poles because I didn't have any preferreds in my portfolio prior to starting this process. So as I look at the broad list, I look at the page for the preferreds, and one of the pieces of information that appears to be missing is around market cap, because the market cap for each one of the preferreds is listed as NA. And I'm just kind of curious. I think I would like to use that information as I'm kind of more focused on large and mega caps and more value oriented in order to kind of fill out my own strategy. And so I'm kind of curious as to why the presentation of the preferred stocks would list market cap as NA.
That's a good question. So the way that we have our API feed set up, the API is just the feed that feeds in data. It feeds in the current stock price. It feeds in dividends and things like that. And we have it kind of set to where, the market cap of an individual stock is the price of the stock times the number of shares outstanding. And that gives you the market cap of the company. It's relatively straightforward for an individual company, but preferreds are a different issue. So if you want to know the market cap, you have to look at the underlying company. So if it's, let's say, when you're looking at the description of the preferred stock, you can see which company issued it. If you just go to their common stock and search for the common stock, you'll see the market cap there. That's a better indicator.
Okay, yeah. So, and that's what I've had. It's kind of a two-step process instead of just having it presented. So, okay, so it's kind of it's about your tool and how it's kind of set up, it sounds like.
Correct. Yeah, it's a much more complicated programming issue to try to tell it to find certain things, to use something different rather than just feeding in, because, for preferred stocks, they have shares issued too. Now, the shares of preferred stock are going to be a lot less than the shares of the common stock. So if you try to do the calculation on the preferred stock, you're going to get something that's really off.
Yeah, you get wild outcomes, wild results.
Yeah.
Yep, I got it. Okay, that clears it up. I appreciate the feedback. So y'all have a blessed weekend and happy Mother's Day to both of you. So, and nice job again, Seth, on the Bible study. You continue to hit it out of the park.
Oh, Scott, thanks so much, brother. Appreciate the encouragement, man.
Great. Right. Thanks for that, Scott. That was a great call. Great question.
That's awesome. Thanks, brother.
All right, 610-363-1110. There's still time for you to get in the call queue if you've got a question today. I will just put this out there. We are getting quite a few calls about a particular preferred stock that is on our list. We will be posting partner commentary later today about that particular stock. It is off the buy list right now. It is not a sell. So we'll post some commentary later in the day. We're not going to do it on the air. It's just not something that's edifying for the general audience. It's really partner specific. So if you're calling in about that, just going to get some commentary posted later today. 610-363-1110 is the number to call. All right. We've got some questions from the website.
Yeah, we do have questions here, Shana. Let's get to Gail. Gail is, I don't think she says her age, but she says, we're overweight in the defensive category. We have MF59 and ETF7. Would you suggest we sell one of them completely? And if so, which one? We plan to keep the percent to keep the percent of the allocation model suggestion in the remaining one. We're in the growth and income model. What would you have for Gail, Shana?
Yep. So if you told me that you were in the growth model, it would be an easy answer. If you told me you were in the income model, it would be an easy answer as well. So what I would have to say is that if you're in the growth and income model, and I don't think it said her age, right?
It didn't say her age.
Didn't say her age.
Mm-mm.
Okay, so if you're in the growth and income model, you have to weigh out which is more important to you. Is growth more important at this time, or is income more important? If income is more important, I would keep the ETF, because that's really what it is designed to do, is to generate a high dividend with little market volatility. The mutual fund defensive position that we have, I believe that's MF59. It is going to be more growth oriented, but it is sort of defensive. So it focuses on companies that should do well and have historically done well during market downturns. So if you're more growth focused, go with the mutual fund version. If you're more income focused, keep the ETF version.
Nice, Shana. Walt is up next here. Walt is 59. He says, I remember hearing discussions in the past on the show about purchasing I-bonds through Treasury Direct. Are I-bonds still a good investment to fill a portion of the fixed income sector? And would you recommend holding on to my I-bonds, or should I redeem them? What do you think?
So there was sort of a window of opportunity in fixed income with I-bonds as inflation was much higher, and so it's kind of like shopping for CD rates. You know, in the fixed income category, our universe is somewhat limited. You know, we like fixed income that doesn't introduce a lot of volatility into a portfolio. So you'll notice that our fixed income broad list is fairly short. So there was a window of opportunity with the I-bonds. They are not on the buy list anymore, so I wouldn't deploy new money there. You could keep them if you want, but the trend in inflation, inflation has been trending down, and the inflation-protected bonds are going to be tied to the rate of inflation. So I would look to redeploy that money in the other fixed income positions that are currently on the buy list.
Awesome, Shana. It looks like we do have a call from your home state, Helen in Texas, if you want to get to that one right now.
Okay,
we can do that as
let's
well.
do it.
All right.
Hi, Helen. You're live on Financial Issues.
Hi, Shana. I have a question on the portfolio tracker. On the previous one, I think you answered a question yesterday. One of the questions was my 401k is probably the largest of my allocation, and so I'm currently tracking with the fund, with the Timothy Fund allocation. So it's changed now to it's going to be the growth on the fund, but I wasn't sure how to allocate that. And my 401k, my company's 401k is with Fidelity, and I didn't know where to get the the QSIP to put into the tracker, and how to allocate it, or if I just do a separate tab for that. And so I'm a little confused since I'm transitioning to the new portfolio tracker.
Okay. So if you're using the fund model, you'll have to do a little bit of extrapolation. So with your 401k plan, you'll need to, and if the ticker symbols for the funds aren't actually on your statement, which a lot of times I see them on there, but if they're not, you could probably do an internet search and find the ticker symbols for them. And, you may have to, it may not be exactly the same pricing that you have there, so you may have to work backwards and just go with it like a dollar figure. Make it work out with the number of shares that you have with the price that's pulling up from the ticker symbol that you find. And then you'll have to look at the descriptions for the funds that you hold in the Fidelity account. And a lot of times they'll give you an idea of what kind of style they are. So whether or not they're value, large cap, mid cap value, large cap, mid cap growth, if they're, sometimes you'll see a dividend growth fund or a high dividend fund. You just have to do a little bit of extrapolation, and then you'll try to fit them into the different categories that we have in the model for the funds. So you'll see it kind of broken down, because there's even several on our list. Like if you're trying to fill out the growth category, there's a couple of options that you can choose from. There's an ETF, there's a growth fund, And for large cap, mid cap, in the small cap space, there's actually, I believe, three different funds that you could look at. There's a small cap values, large cap value, and an ETF version of it. And then there's the international. So, if you kind of read the descriptions and maybe look up, I don't know, on some of the, maybe try your brokerage. If you have a brokerage account, look up and see what kind of fund the Fidelity funds are, and then you can maybe help get them in the right category. It doesn't work really great because our portfolio tracker is very specific to our recommendations and our model, but that's a little bit of a workaround that you can try. Well, folks, hang tight. We've got one more quarter of the show to go, so we'll be entering the fourth quarter when we come back here. Stay tuned. Phone lines are open, 610-363-1110.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking, bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
May is a time to honor mothers, their strength, sacrifice, and unconditional love. But for many women, motherhood feels uncertain and overwhelming. Fear and doubt leave them considering abortion. You can give hope. Just $28 helps a woman hear her baby's heartbeat, a powerful moment that leads 80% of mothers to choose life. Go to preborn.com/FISM to give today.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I learned how to pray to God. It helps me through my day. I will commit myself to learn more about God's Word, to be able to share the gospel to others. Jesus has been a big impact in our family. Now we go to church every Sunday. I see more happiness and less arguments. God's love is so perfect, I will not change God for anything.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. Thanks for staying tuned today. We hope that you enjoyed Bible study this morning, as Scott said that he did, and that you'll sign up for Bible study. Seth, where can they do that?
You can do that on the website, folks, financialissues.org. Just go to the resources tab, and you can see the call-in number, access code. That's how you join the Bible study, so you don't even have to sign up for it. You can just join it on Friday mornings. If you want to join the email list, though, that I send out weekly, just send myself or Pat a note, pat@financialissues.org or Seth@financialissues.org, and we'll make sure to get you on that email list.
Great.
Yeah.
All right.
Yeah.
What do we have next?
It's awesome. So, Shana, I had a question for you, and this is something that I've been wondering a while in my own investments, investing in some of the Timothy funds. I've come across the different types, specifically like the different classes of shares, the I shares, A shares, C shares. Could you explain for me and our audience what the difference is between these two, and maybe some of the benefits and drawbacks of them also?
Sure. All right. So there's different ways that you can purchase the same fund. For example, if it's let's just say it's a large mid-cap growth fund offered by the Timothy Plan. They offer a version in the A share, the C share, and an I share. Not all share classes are available on all platforms, so we do have a little description there which one we think is the best. And what it has to do with is the cost of purchasing and owning the mutual fund over the long term. So whenever you buy a mutual fund, you're hiring a professional or a team of professionals to make the day-to-day decisions on the individual holdings in the fund that you own. So every fund has its own objective. It's a large cap, mid cap growth fund. The objective is going to say that the majority of the assets have to be invested in large cap or mid cap companies that have a growth orientation. Now they may have, more parts to their strategy on how they pick stocks and things like that. But in general, that's what you are signing up for whenever you are getting that particular fund. And then you're managing your asset allocation by managing how much is allocated towards growth, how much is allocated towards value, how much is allocated towards large and mid caps, small versus small and mid caps, international, fixed income, so on and so forth. So once you decide which fund that you're going to buy, then you have to make another decision on how you're going to buy it, which share class. So in an A share, you have sometimes you have upfront sales charges to get into a position. That's the case with the A share. In a C share and an I share, there is no upfront sales charge. So A shares have traditionally been sold by advisors who don't work on a fee basis, and so they get paid upfront for putting you into the fund. And then every share class has an operating expense. So it costs money to pay the fund managers. There's transaction fees, there's cost of printing statements, there's cost of complying to financial regulations, so on and so forth. There's a lot of expense in running a mutual fund. So that is charged, that is shared by the shareholders, because when you buy a mutual fund, you're putting your money into a pool that invests in a lot of different securities, and not only are you sharing return, but you're sharing the cost of doing that as well. So all of the upfront sales charges and operating expenses can be found in the prospectus for mutual funds. And the in an A share, I just looked up, the average expense ratio ranges from about 80 basis points to 125. So let's just call it 1%. So on an A share, you may pay up to 5.5% to go into the mutual fund. And then that's a charge that you see up front on the difference of the price on the first day. So you buy it for a certain price. The next day, theoretically, if there's no movement in the value, it's worth 5.5% less than what you paid for it. Over time, that cost tends to be minimized the longer that you own it. That's another reason that we say mutual funds are very long-term investments. And then the operating expenses happen every year, but you don't see money deducted from your account. You don't get a bill for it. What happens is it comes out of the return. So the expenses are paid before you see the return in the investment. So on an A share, if you're investing larger amounts, 50,000, 100,000, 250,000, and then you get up to 500 and $1 million, that upfront sales charge goes down. So if you're investing, a lot of money, you can get the discount on the first purchase. So it could be as little as zero if you're investing over $1 million. So in a C share, you don't pay anything up front to purchase the share, but the average cost of a C share is higher. So what happens in the advisor world is that with an A share, it's pretty clear what the advisor and the broker-dealer split. That's the sales charge. In a C share, there is no upfront sales charge to the person who buys the share, but the advisor does get paid, but gets paid quite a bit less than if they had sold an A share. The difference is that the C share has about a 1% higher internal expense, and that's because the fund charges that and pays it to the advisor over time to continue to service the account. So if you're not using an advisor, it's you don't really want to be paying the fees that would go to an advisor. That's why we recommend the iShare. So the iShare is an institutional share. It's only supposed to be available in accounts that are managed by financial advisors who charge a fee. So to avoid double dipping and the advisor getting paid twice, they strip out that either that 25 basis point or 100 basis point, what they call the 12B1 fee, and the internal expenses on the iShare are lower, and typically you don't have to pay anything to get into it. So we've been told by many partners that the iShares are available on some discount brokerage platform. So the iShare is going to be the most cost-effective way to purchase a mutual fund. You don't pay anything to get into it unless the brokerage platform charges you a transaction fee. Then that's another piece of the puzzle that you have to evaluate depending on whether you're investing small amounts or large amounts. If you're investing large amounts, the transaction fee is going to be very minimal. But if you're investing smaller amounts, you may need to rethink that as well. It may end up being cheaper to buy the A share. So in general, the I share is the cheapest and our first choice. The A share is our second choice. The C share is our third choice because it tends to be the most expensive to own over time.
That
was a lengthy explanation.
No, thank you so much. I was trying to figure out, could I remember this alphabetically? But no, just remember the I shares option 1, A shares option 2, C shares option 3. So that's good.
Yep. And it says it in our descriptions. If you go to our broad list, no matter which share class you're looking at, you'll see a description over to the right, or sometimes it's in the drop down, but it'll reiterate not the long explanation that I just gave, but it'll kind of tell you this is our first choice, second choice, and third choice.
Yeah, awesome, Shana. So we got a call from a listener named Petra. She was a little shy, didn't want to come in on the air, but she did want to ask this question, Shana. Okay. Question is, how should we look at investing in gold as a hedge against inflation when it doesn't, some of the, similar things we've talked about, gold doesn't pay a dividend, that sort of thing. How should we look at it?
Yeah, so gold has traditionally been known as a hedge to inflation, but so has stock investing. So our bent has been more towards individual companies because over the long run, they have had a better return than gold. We have included a small allocation towards some metals now in our asset allocation model, and there's several reasons for it. The main reason for me is this long-term trend that has been developing and we see it as being even longer, a longer-term trend into the future of central banks accumulating gold. So the run-up in gold that we've seen lately has been because central banks around the world are accumulating gold. Now, there's a lot of speculation about why that is the case. Are central banks around the world looking to bring gold back as the standard for international currency and valuation of currencies and trade? Maybe. Is that the Great Reset? Are we going back to a gold-backed currency? Maybe. Whatever the reason is, it's a trend. So we've been following the trend for a while, and we've allocated a portion of the asset allocation toward those metals.
Awesome, Shana. Final question of the day, Mike, switching to the 70 and up model. He's wondering, what do I do with anything that was on the 40 to 60 model that isn't on the 70 and up model? Thanks so much for you. I've been a partner for a long time.
Yep. Okay. So what's going to happen is it's going to fall into the other category, and your other category is going to be overweighted. So you're going to be stuck with the same question, what do I do with it? So here's my feedback on that. When your objectives change, so if you're getting older, if your objectives are changing, if you're switching towards more of an income focus than a growth focus, and that just happens naturally over time. And so if your objectives have changed, so do your investments. So if it's not on your model, if it doesn't have a place to fit into your asset allocation, you need to consider an exit strategy and moving into the things that are going to be more appropriate for meeting your goals. Great show.
Yeah, busy show. Yeah, absolutely.
Great Rapid Fire Friday segment 4. So, All right, folks, it's time to go for today. We wish you a great weekend. We hope you have a great day of worship on Sunday. We hope that you have plans to honor your mother. It is Mother's Day. Consider making that donation to our Mother's Day preborn campaign.
And happy Mother's Day to you, Shana, as well.
Thank you.
Yeah.
Thank you. It will be. I know it will be. I love my kids. And join us back next week because, Lord willing, we will be here to help remind you that God owns it all. The Master's coming back. There's going to be an accountability. We're going to give account for the time, talent, and treasure that we were trusted to manage, and we want to help you be found a good and faithful steward in everything that you do. I'm your host, Shana Burt, signing off. Find out more about us at financialissues.org.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.